let's have a look at next one, technical. So we analyze now fundamental. Let's have a look what is happening here technically. So that's what we can see, the share price here. It's very difficult to see, but it was $14 here, right? And then dropped nearly $7, so more than 50%. And look, they have uptrend in general. So if you look at this, it's a growing trend. But let's have a look at 2011. The share price was around $32, and then it's dropped to around $24. Now it looks very small, this drop on a bigger scale. But when it goes from 32 to 24, it's $6 drop. So it's 20% drop, correct? So let's have a look here. It's around, what, about $50 here, and it's dropped to nearly $40. How big the drop? Again, 20% of drop. So, and that's, it was staying here for a couple more years, and then it's moved up. Here again, $72 to $52 roughly. So it's what, $20, nearly 50% drop here, maybe 90% drop here. Again, after that, the move up. And now we can see from $96 to $52, 45% drop. So we can see that actually drops like that, they were happening in the past. 20% here, 30%. Right now it's 40% drop. Okay, so it's all right for the company to have such a drop. Maybe not that huge, but still. Now, secondly, if we look at the indicators, what we can see at the moment, MACD quite low, stochastic and RSI quite low as well. Now, if we look at RSI, so how many times this situation happened in the past? We can see one, and after that it was a growth from nearly $60 to 72, so it's 20% growth after that happened. Second time in 2014. After that we can see from 50 whatever dollars it went to 900, so it's nearly 100% growth here, maybe 80% growth. Then it was here in 2008. So for the last, what, 10 years, the situation like that happened only 1, 2, 3 times. So, and now we have it below 30% level. Okay, let's have a look at stochastic. How many times happened stochastic? Similar in 2016, similar in 2014, very close in 2012 and 13. And after each time, we could see the 20% growth here. Okay, and after this one, it's much more than 20% here. It went from $40 to 70. It's nearly 80% growth here, right? And then we can see similar situation in 2009. Very difficult to assess how much, but we know after that it was growing. So, okay, basically we can say that stochastic was on the same level 1, 2, 3, 4, 5, 6, 7 times within the last 10 years. And when we look at MACD, actually, maybe MACD was below 0 in 2008 here, slightly in 2014, and now. So it's only 1, 2, and 3 times also. So now we have quite a low MACD in this particular case, in over situation. So based on these technical indicators, what can you tell? Is it time to buy, sell, or hold the company? Yeah, so it's definitely an oversold situation. Maybe not buy completely, because we can see it's not turnaround. We are looking when they have this type of moves already. So that's when it start crossing. That would be the best time. But again, remember that's a 7-day indicator. Okay, and maybe it will change in a week or so. And but look at the trend. It's 1, 2. So it might continue and do a 3, because we're not sure about madness of people who traded, but definitely it's quite low. And if we move it here, so it's somewhere at the previous, whatever previously was resistance, now it's becoming support. Okay, so that's the thing which is good to take into consideration. Okay, that's the bigger scale. Let's look at this closer. That's what we see. Okay, this move. So we can see that upper kind of highest points, they're moving down faster than the low points. Okay, and at the moment we can see it's close to support, right? Very close to support and downtrend, and that this is the gap, so which we can have a look. If you go to Seeking Alpha and find that specific date and see how much company missed the earnings, but they dropped from price from $80 to what, to nearly 60. So it's $20 drop. So which is what, nearly 25% on one single day. And see, did they miss earnings badly or how much? And what's the like general consensus was at that particular point? And look at this, how quickly it's moved back up and closed the gap. And then now it's slowly, but on a downtrend. It's always dangerous to buy on a downtrend because majority of traders and investors will look at the price rather than intrinsic value and fundamentals of the company. So we are not completely sure how long it's going to continue. But even if we look at this trend, so what can we expect? One roll, two roll, and the second roll, which is happening, still will bring the company to around 60 bucks, I presume. Okay, so I don't know if you agree or not, but based on that, let's have a look at smaller scale. Okay, we can see this downtrend. It's coming here, and 1, 2, right? So based on that and the previous trends, where do you think it's time to enter the position? At what prices are you going to enter the position if we decide to do so? Okay, 46. So it's presumed here. So yeah, somewhere right on that point. Okay, any other? 49, yeah, somewhere, because that could be a bottom here, right? So around 50 bucks here. So where is it? Here, okay, 49, $50, something like that. So yeah, you're absolutely right. It might slide down more if we definitely see that, because at the moment we can see that highest points of the roll, they're lower and lower. As soon as we see that this broke this downtrend, that's where we have to be really kind of paying attention to the growth, because after that it might move quite fast up. Okay, this particular case. But again, yeah, absolutely right. If I enter the position, probably I wouldn't be entering at this particular point, 52. I will go into have a look at this. Why? Because first of all, it looks like at the resistance right here, but also we know that indexes are all high, and if they pull down a bit like 5%, we can see the 5% or 4% drop here as well. So yeah, absolutely, yeah. And the best way is to wait for earnings report. And of course, you can miss it like Nike, but you won't get into this type of drop if something is going savvy, right? So yeah, it is good potential upside in any way, correct. Okay, so what kind of strategies we can have here? So let's have a look. As always we have. Again, remember, before you place any trade, you have to understand fully trade. Okay, and again, repeating, you invest, guys, your own money, and you have to make your own decisions. Okay, these are just examples what we could do. Okay, but when you're placing your trade, you have to do it on your own. Okay. All right. So if you're a long-term investor, if you don't have enough time for paying attention to the market, especially it is so late in Australia, it's 11:30, right, until 6 in the morning. So if you decide to implement buy and hold strategy, and so you can buy it, put it like non-road, or at $46 if it goes there, or $49, $50 like Ilya, and then we can wait at 100 or even higher. If the share price will get to the same multiples as before, it might go to $167, right? So you can wait all the way if you decide to buy this company. So possible waiting period, what? Maybe like 16 months, maybe more, maybe 3 years, but still it represents 100% growth. Okay, plus dividends on the top of that. Okay. Now, if you decide to be more active on the market and you decide to buy and sell, and using roll strategy, you can use different rolls. You can use these rolls, smaller ones, or you can use bigger rolls, these ones. Okay, it's again based on your strategy. And whatever you use, if you buy at 49.50 and then sell at $52, that would be 5% roll. But it might happen within 4 to 5 days, maybe very short. So you can do it weekly buys and sells. If you decide to wait until $60 level, so it might take you a couple months to do it, but here the profitability will be around 20% on those rolls. It's again based on your own strategy, your approach to the market. If you use options, what we could do, again, the best way to buy shares at support. So even though we're using options, it's much better to wait until it goes to support level and then to enter a position with shares, and then you sell to open. Now, again, this is one example. On the next slide, I'm going to show you 4 different option trades with calls and 4 different option trades with puts. But for example, if you decide to wait and buy at this level and then wait until it goes up at current levels and then sell a call for 2 weeks, you might get $1.7. So which represents about 3% of rent profits. And similar situation with puts. Actually, puts, what I did, I put current price at, if we do it right now, at the money, so we get 3.4%. Again, if you wait until share price goes to those levels, you might get the same amount of money for strike price of 50. Okay, so be careful. And in this case, your share like break-even price will be low as well to whatever price it drops. And then we can consider if we're going to buy leap calls instead of buying shares, and we need to assess if it's good or not good right now. Okay, so let's have a look. Selling call options. What I did here is look at 2 strike prices, 50 and 52.50. But you can look at all the strike prices. So 50, it would be really conservative, and 52, it would be neutral. Of course, you can go and look at $55, and instead of selling call in the money, you can sell out the money, right? And it's all based on your strategy, because if you believe that share price is going to recover enough, you might get only 1.5% here on the sales of the call, but if it grows from current levels, you get $3 profit, which is more than 10%. Oh no, about 7% growth, right? So you will get 8% profitability. Now, if you do at the money, okay, and you get $1.7, so it gives you what? If now it's here 3.2%. Okay, and if you do $50 strike price on here, so you get 1.4%, but you're really conservative, right? Because you're ready to sell at $50, even now price is 52. So the drop has to happen 5% in order for you to start losing money. So your break-even price in this case would be $59. Okay, and then I took 2 dates here. It's actually not 1 month, it's 0.75 months because it's only 1 week later. It's 18th. What is that? It's 24 days later. It's 11th of August. It's here 4th of August. And we can see the differences. If you sell at $50 strike price, you get $3.10 here and $3.3 here. So only 20 cents difference. And if we get $52 strike price, so we can see here 1.7 and 1.8. It's only 10 cents extra for 1 week. So not that much. So, and when you're considering something like that, you always try to do, in this case, smaller week, like, I mean, less weeks, because you make nearly the same profit within 2 weeks rather than within 3 weeks. And that's would be your profitability, annual profitability if exercise and not exercise. So the highest probably it would be 141, which is fantastic, right? And the lowest would be $22 here, or 22%, which is also pretty good on the particular case. Okay, with options, is it clear, guys? Okay, okay, perfect. But again, remember that we buy shares at this level and we sell options at this level when it goes like that. Then we buy back options here and then sell options again here. So that's how it works. So it's here sell, here buy. Okay, so that's how it works. Okay, perfect. Let's have a look to put options. So instead of buying shares, like Nonna, I think Nonna said, or somebody, we can sell puts. So and that's it's the right side of the trend. Again, I look same strike prices. It's for whatever reason it's moved down here a bit. So $50, okay, and $50 here. So it's again 1 week extra. So what can we see? If we get until 4th of July, 4th of August, we get 90 cents. If we get 1 week later, we get $1.10. If we use 52.50 strike price, we get $1.80 and $2.15 here as well. So on the put premium, we can see it's a bit higher premium. So it's a bigger profitability here than with calls. So that's why you might consider 2 weeks or 3 weeks instead of 2 weeks. So if you decide to do it, and then when you put it in the table, you can see that profitability here is like that. So again, the best trading strategy will be 163%, which gives you on that particular level, it's using margin. If without margin, 81%. Okay, if you sell call with 52.50 strike price and you get $1.80, but the share price has to move above that level in order for you to start making this money. Okay, and the lowest point, the most conservative, if you use $50 strike price, yeah, and getting $1.10 here. So that's the way. So it's much better to use for 2 weeks because we're getting 42% profitability annualized. Okay, in this particular case. So and then if the share is put to you, so that's the price of the share. So that would be 49.03, the lowest one, and that would be 50.8, the highest one. But still, it's much below the current share price which we have right now. So if we're using this one, so we're straight away buying shares on wholesale rather than on retail. Okay. All right, guys, is it clear on that one? On puts? Okay, but again, just want to repeat that at the moment we're at support, at resistance, right? So we don't sell puts here. We wait until it drops down. So the best way is to get same premium, but for example, $1.80, but at a $50 strike price. And you might get it if within the next couple of days the share price goes to its support, okay, to $50 level, and you sell puts here. So it's different from options, call options. We buy call option here back, we sell puts here, and when it goes to resistance, we buy them back. Buy put options here, okay? And then when it goes down again, we sell it again. So different from call options. Okay. All right, so let's have a look at buy and lead call options for tractors supply. Right. First of all, what we can see, high option premium. So if you add it and calculate it now, it's for example, if we like $50 here, it's nearly 10%, and here it's even more, it's 15%. So I'd say it's quite high premium. I would rather look much lower. And also what you can see, quite big difference between bid and ask. Here's 40 cents, here's $1, so even higher. So if you decide to buy call and sell call afterwards, you would need at least to make $1 profit here before you make your own profit. So it's quite big spread. It's also $5 difference in price, in strike prices, not always good, and very low interest here, open interest here. There is no, you see, open interest is much lower. In our case, we're trying to find companies which more than 1,000 open interest. Okay, at the moment it's quite low. So that's why it doesn't look like a good strategy for now, but I would rather review it after the earnings on 26th of July. So something might change after that. Okay, so that's about leap call options for TSCO. Okay, guys, all clear on that one? Okay, great. Okay, that's it. So for the company, so based on from 0 to 10, how do you estimate this company right now? Where would you find it for yourself? If generally, overall, yeah, very good one, absolutely. I probably wouldn't put myself 10 because technically it might go still down, but definitely 7 or 8 is pretty strong one. Absolutely, absolutely. Then options are not that high premium, but again, for long term profitability is pretty attractive company. I agree with you. Okay, do you have guys any questions on that company or any other company or anything else you can ask right now? Nope. Okay.